Crude oil, long-term forecast for the week of July 8th, fxempire.com. The light sweet crude market, as you can see, just shot straight up like a rocket during the previous week, closing at 103.40 for the week. The 100 level was broken above, which was pretty significant resistance. But that being the case, we are heading towards an area that is a bit resistive. And on top of that, the reasoning is just a knee jerk reaction to what's going on in Egypt. Yes, Egypt produces 600,000 barrels of oil a day, and there is violence in the streets of Cairo. However, the military has control of the country, and the military certainly will not be shutting down the Suez Canal. The Suez Canal closing would be horrible for the oil markets, and that seems to be what we're reacting to. Quite frankly, though, with the Egyptian tourism market being absolutely dead, decimated over the last couple of years, we find it almost impossible to believe that the Egyptian military would allow the Suez Canal to be closed. And on top of that, who's to keep the U.S. Navy out of there? Obviously, the Brent market did the exact same thing. We can see this market going up to 110, but that being the case, we expect to see a bit of resistance in that general area. And also, these types of knee jerk reaction moves we've seen recently in the last couple of years, and they almost always end up very poorly. You get people getting very bullish, and then once everybody starts buying, something happens. You turn around and you retrace the entire move in a blank. That's essentially what we're waiting on. We think that 110 could be the trigger price, and most certainly, if things calm down in Egypt, that will be the trigger as well. So we're actually waiting for a resistive candle in order to start selling again.